Hello everyone, it's Stuart here again. Welcome to the proptrade.com, our daily video update on what's moving markets around the world, obviously particularly in the United States, because it's we all are impacted by what's going on across there. Hope you're well. I've been to the dentist today. It was actually quite a pleasant trip, so I'm in a fairly good mood. I was expecting to be a bit grumpy this afternoon, but I'm in a pretty good mood. The weather is absolutely stinking hot here for London. It's massive heat wave across all of Europe. 46 degrees recorded in Spain yesterday. Paris sweltering. The southern countries also sweltering as well. It's supposed to cool down here tomorrow. So yeah, the changeable London weather is back. So here we are, 1st of July. Welcome to the second half of the year, my friends, my trader friends. Hope your June went well. We had a pretty good June. We had that massive losing week before last, but we bounced back last week. We were very positive for June, very positive for the quarter, and very positive for the first half of 2025. So if you follow what I do on the Discord channel, just join us here. Discord's a really chatty, easy place to exchange ideas and what's going on. This is our general, here we are, the proptrade.com. Here's our general chat panel. So download the app. You can use it on your laptop, desktop, or your mobile, or wherever you want to use it. Obviously. So this is where I post what I do at the end of every day. So under here, under trading strategies, is where I post the trades I've taken on the close of the daily candle, basically. It's two types of approach. One's a bit more conservative than another. When I put also, they're the ones here. So these were two standard trades, this Kiwi CAD, Kiwi yen, and the also here, the pound Swiss, was with a bit more caution. I say here, I usually close that out first thing in the morning, 8 o'clock, 9 o'clock, usually. If it's going against me, perhaps before then, if it's going with me, I'll sit on it and see how we go. But I mean, ironically, all three of those actually lost. But anyway, I'll update the actual numbers for June. I meant to do it over the weekend, but we were babysitting our grandson and I never got round to it. But yeah, I'll update for the second quarter of June and 6 months tonight. I think I've got everything in play. I think I've got 10 open positions at the moment. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, there's 10 open positions at the moment. Some of them are bigger than others. Some are a half positions. Some are two big full lots. Not two lots, but two risk levels. The way I trade. So yeah, 10. I'm about on my edge of exposed risk to the market. I'm very, very exposed to the dollar, so any turnaround in the dollar could catch me out. But we've rammed in a lot of profit on the dollar, so I now have to keep that running. I'm currently still long euro, short dollar Swiss, long Aussie dollar, long Kiwi dollar. That's the only other. I'm saying what? That's the other dollar one. Anyway, that's so. If you want to follow what I do, if you're interested, if you're not interested, that's up to you. Obviously, if you're a scalper, the best of luck to you, my friends. But here on our Discord group. So anyway, let's get back to what we're going to talk about today, which was here. It's about quite a data dump. As we get to the end of the quarter, obviously things get balanced out, and we start the new month, the new week all on Monday, which is always or today actually, don't we? Not on a Monday, but always quite interesting to start a full week. Obviously, it's a compressed week because it's Independence Day for the United States on Friday, and things are closed. Let me just close that. So it's compressed. So obviously, first week of the new month is typically non-farm payroll, one of the most volatile events on the calendar. That comes on Thursday this week because of Independence Day on the 4th. So about 120,000 new jobs are expected. Unemployment rate looking to tick up to 4.3%. Anything above that, and things will start getting a bit twitchy in the Fed, and the pressure of a July move will start to increase. We'll come to that in a minute. But that's obviously the big news of the week, the non-farm payroll for many traders. A lot of other key data kicking around at lots of people, sort of that goes over their heads. That ISM services PMI is key later on Friday, on Thursday as well. So big day Thursday. We'll be live again, obviously, for this. ADP tomorrow, the private payrolls numbers. The weekly claims are also coming out with the non-farm payroll data. So it's big jobs week this week. Have a look what they look like later on in the week. But lots going on. So how we started the week? Well, I didn't redo this yesterday. We did a little teaching video yesterday. Things in China, PMI wise, still remain quite moribund, and we are under this expansion number. Remember, anything over 50 for the PMIs, the private managers, production managers index is a sector in contraction, and you can see here certainly manufacturing globally is very sluggish, and here even in China you can see we've been in negative mode here for the best part of 2.5 years, 3 years. Also, obviously the COVID pandemic, lots of stimulus kicking around and we lifted up. But even in China, the once sort of manufacturing hub of the world, very much still in negative mode, and really, even when it's turned positive, it hasn't lasted very long. It's been the outlier, and it's come back. I can hear Aurora is here, isn't he? There we are. Good afternoon, sir. How are you?
Hey, how are you?
I'm all right. As I said at the beginning, I don't know when you joined, but I don't know if you heard, but I've been at the dentist in the last hour or so. So I was expecting to be in a bit of a grumpy mood with the really hot weather here, but I'm not. It was okay. So yeah.
I saw that you are so excited and explaining the market.
Well, there's loads going on. There's absolutely loads going on this week. We've had, things are looking okay. Stocks are rallying. The trend on the dollar continues to be pressured, and I'll come on to what Powell said. Or been questioned here in Portugal in Sintra. I think yesterday I said it was Italy, didn't I? But no, it's Sintra, the island off Portugal, where the ECB hold their summer getaway, basically, and all the very interesting central bankers of the world go and meet there and have a little chat. So very interesting speeches going on. So I'll come back to that in a minute. But basically, it's the first week of the month, so it's PMI week as well. So China was a bit disappointing yesterday. Inflation in Europe still is weak, but not hasn't gone away. It's still 2.3%. Germany disappeared for the last month here at 0.00%, down from 0.21% for the month. But overall in Europe, it's on, it's whether it's controlled or not, we'll see. Obviously, the tariffs have yet to have an impact, and that's what everybody's been saying down in Portugal. All the central banks have as well, but still worried about its potential impact. So the main coming to today, the main comments from Powell suggested that every meeting is live. There's no decisions made ahead of it. They're still data dependent. Blah blah blah. So the chance of a cut in July, at the end of July, end of this month now, it's still a full month away, it's 31st, has risen quite recently. Let me find the CME Fed Watch tool. This is a free thing you can get on the internet, guys. You don't have to pay for this. And so this shows you expectations from the futures and the options market, where interest rates are expected to move month by month, meeting by meeting, by the very data hungry CME group, very reputable company. So they've changed the setup of this a bit while. So next meeting is the 30th, still 4 weeks away, and then there's obviously there's not one in August, and we run into September when many are expecting the main cut to come, if indeed it still comes. So political pressure is building. We all know what President Trump's been saying about Powell, and yesterday brought in some other comments about other members of the Fed as well. So it's not just Powell coming under the stick. I mean, it's amazing. I mean, he appointed Powell, but anyway, he's very liberal, or not liberal, liberal, ironically, with his criticism of the people. So 80% chance of no change, basically 78.8, and a bit more than a 20% chance of a cut in rates by 25 basis points from the range here to 4.25 to 4.5 down to 4 to 4.25%. There's a 20% chance of that, according to the market, according to real skin in the game, the options traders, the futures traders, where their bids are on the dollar moving. So That has increased recently. If we just go up here, it doesn't show. Where has it gone? It's not showing me the change. Where's it gone? I've changed the format on this. Oh, dear me. There we are. So you can see the change. This is where we are now. This is where we were a sort of a week ago. It was about an 80% chance. So it's come down a bit, but not as much as many were thought with the amount of comments that's come out of potential nominees for Powell's position next May. There's two in particular, Waller and I've forgotten the lady's name, but sort of openly talking about potential cuts for July, getting a bit more hawkish on the chance of a rate cut. But that's still very unlikely to happen in July. Still things can happen, still 30 days away, anything can happen where the markets have been recently. But if we then step right out through the summer lull, through August, we flip to a 70 or 73% chance of a rate cut by then. So that, if it doesn't happen in September, Trump will probably have blown a gasket by September. Obviously, the data from the second quarter and the impact of the tariffs will be in. There's obviously all sorts of other political things going on. There's this great big beautiful tax bill he's wanting through by Friday. It looks like that might actually get through more or less intact. Again, Elon Musk came out criticizing it again quite heavily yesterday and the day before. So the war of words between those two former bros continues. So 73% chance of a cut by September, and then for many that's it. But also December, we go right out to the end of the year, a 45% chance, 50% that we go again. So still many banks, investment houses still have potentially 25 basis point cuts on their books. Many are sort of pulling that back. There's also quite a strong wedge now of talking about actually nothing having to do, the Fed not having to do anything by 2025. But again, the cuts then get pushed out to 2026, and we'll have a big plethora of cuts for 2026. This is a sort of story that was going around this time last year when we were talking about delaying cuts for 2024 ahead of the election, and there'll be a raft of cuts. So all the euphoria around Trump getting back in, and deregulation and tax cuts and tariff and America First policy. We had all that euphoria, and that was going to happen, and it hasn't happened, has it? We've the worry over tariffs and the impact of tariffs and the impact that has on prices and the ordinary guys in the street is still hanging over there. So although Powell comes under a lot of criticism from the administration and from the president himself, we are still where we were. So nothing particularly new out of the Sintra meetings, never are. The next big talking shop is Jackson Hole at the end of August, where the Fed guys and ladies all go off to the middle of Wyoming and the big wide yonder of the open plains of Wyoming, and can be a key pivot point towards the end of August. So that's the next big gathering of central bankers after this few days in Portugal. So again, the data today, interestingly as well, sorry, I will stop talking in a minute, but there's been a lot going on. So the PMIs out of the US, the Institute of Service Managers, the key PMI data. Remember, manufacturing still in the doldrums like we saw for China. It's no different in the United States here. We've been in negative territory for over 2.5 years, and we're 49. We just can't get back into the expansion zone. And when we have, again, like China, it's come down. But remember, the symbolism of manufacturing for many countries, and particularly for this president, particularly for this administration, is huge. Bringing steel jobs back, or bringing car manufacturing back, bringing high value pharmaceutical manufacturing back to the United States. That's been his mantra. That's how he got. That's his economic policy. He's pledged to tariffs. He's not an economist. He's a businessman. He works on his gut instinct. There's lots to be said about the potential inflationary impact of these things, and also obviously this massive, mind-blowing debt that the US government has. and it's just adding to it 3-4 trillion. Pick your number. It could be massive. It could not be massive as well, but it could be a huge. It's certainly going to be significant, and that's the key thing. And that's why a lot of certainly obviously the Democrats are against it politically, and even a lot of Republicans against this one big beautiful bill. But the administration and the president are determined to push it through. So manufacturing, although it accounts for less than 10% of the US GDP, it's hugely symbolic. A bit better than expected, but more or less in line at 49. I suppose it's better than it being 48. So that would have been a bit of a positive sting for the administration to spin. And then finally, the JOLTS report. JOLTS is something the former administration, Mrs. Yellen, put together when she was a chair of the Fed in Los Angeles. Openings, remember, this is jobs openings, job opening opportunities, and it also captures the churn in the market. So when somebody moves from one job to another in the month or in the quarter, it captures that. The JOLTS data captures that. So we are down. Sorry, we are bounced a wee bit up, but you can see the trend again here continues to decline. So we're under 10 million, under 9 million, under that key 8 million this year, and we've continued to decline into last month. It's bounced back this month. So that could be the tightness of the jobs market with people leaving both the US and leaving the jobs market, or leaving the wider US because of the clamp down on immigration and migration, and also people just leaving the jobs market. So the sort of participation rate number on Friday will be interesting to see how that's been impacted. But there's been a bit of a bounce, quite a significant bounce this week. You can see if we take the forecast off the brown rock, you can see it's a tick up, but it hasn't obviously enough to break the trend. We are still moving down. This is a tick up like we've had in the past. Down 2 months up and then down again, 2 months up and then down again. So July number is better than expected at 7.7 million. It's still under 8 million. It's still a healthy, jobs market. I'd argue that the weekly claims spiking last week and the week before, that 3-week rally we saw with the weekly claims gone here to 240,000 and 245,000. Back to 236,000 last month, shows still a relatively strong jobs market. Much more important than the manufacturing PMI data today will be that services number on Friday. If we are back under 50 for services, and services account for close to 90% of the US economy, that's bad news. You can see this is on the other side, and it's much more significant. It's been positive all through the pandemic. Pre-pandemic, obviously back in 19 here, and it's been positive, but it's weakening. You see here, and again, that's what everybody's been saying. That's what the markets have been anticipating: a weakening economy. But it's slowing, it's softening, but it's not crashing. It's not going to go into recession. Many are saying, and that's probably my view as well, for what that's worth. But anyway, let's see if we can get back into the positive territory. Every other time we slipped into below 50, we've bounced back quite well. So see what it says next week. Tariff data is coming now. It is Trump data. It's no longer Biden data, that's for sure. So sorry about all that chatter, but there's a lot going on. And be more tomorrow, more on Friday. But anyway, where are we as far as trading's concerned? Well, sorry, Arura, do you want to listen to me yapper on for the best part of 20 minutes? Anything you want to add to what I've just been chattering on about?
You just told everything I was thinking about the manufacturing stuff, that how it can affect the market and how we can count on that. Will that the numbers that we have there, is that the number that we can count on the long-term trends or not? Things, when we are looking at the numbers, the manufacturing, it sounds like they had some recovery in most developed economies in Europe and the US. Same when we are looking at in the emerging economies, like if you look at the South Korea, you look South Korea actually is like the developed economies, but still, if you look at the South Korea, or if you look at the India, they are doing amazing. Especially the Indian numbers, the manufacturing is 58.4. It's amazing, But still, as for the European economies, we can see some development there, but still, the most of them still they are moving under 50 expansions area. So this means that, I mean, still we have some challenges there in the economy in the eurozone that we have to come over that. So with looking at these numbers, with the inflation that reached to the 2% ECB target, while the core inflation is still doing fine, but after previous months flat 0.4% core inflation and 0.3% headline inflation on the monthly base increasing. That these numbers telling us that the inflation is somehow is under control, but still the manufacturing sector is getting a little bit better. So maybe the central bank in Europe can stay hold this time. I mean, for the next meeting, they may stay hold and they don't cut their rates with these numbers with the ongoing but I mean, yeah, the things is like that. Probably they will need to think more before making any other decision. So if we look at this point, like that, these numbers in a long term, if we look at these data as the mid and long term, what these data means, I think these data means that the central bank in Europe will need for some pause before making the next decision. So which means if we have a pause here in Europe and comparing with the other economies, comparing with the British central bank, which we expect to see at least 25 basis point rate cut in the next meeting. So what can happen? I mean, how they can affect the market. So these data sounds like I made some prejudgment about the weakness in Europe. Probably these data, if they can, if these data come to end to that, the European Central Bank going to hold the rates. Maybe my previous expectations for a little bit weaker euro, maybe that can I may can expect that accept that it was a little bit prejudgment and maybe I made a mistake and probably I have to change my idea. But that if the central bank in Europe going to hold the rates, then we can expect the euro to uh, hold its rate actually around this area or a little bit even higher against British pound or even against US dollar. That's prejudgment maybe. I mean, we have to look more data to see will that happen or not. But these data sound like they say that the European Central Bank can hold its current rates and can hold its current positions. And if that means, which means that can support the euro against most of its against most of other currencies. I mean, major currencies.
Mm, mm. Yeah, we'll see.
Yeah.
Yeah, you're absolutely right. I mean, the rally, the run against the dollar continues. We've come down today on that better US data, and also Powell's comments sort of pulled it to the upside here earlier. But we overall euro's weakened back under the key 118 level, but we're still long here. It looks like my stop loss might be getting taken out if this continues down. But we've been long. This particular trade from all the way down here, just as we went over 116. So we're very much in the money on this one. Stop loss I dragged it up again this morning. Half of it was closed for the June account, and this will be one of the first closed trades for July account if we get stopped out here at the 50-hour moving average where our stop loss sits at the moment. So dollar, the trend still remains under pressure, but so it's had a better movement from what the data came out with today and what Powell said, and the idea of a potential cut in July getting pulled forward potentially, but again, that might get pushed back. As I said, there's still 30 days before that actual decision is made, and they've still got 2 weeks of best part of 3 weeks of talking to the press before they get shut down. So 118, a high earlier today. It's not September 2021. I think it was the last time we were over here. If I just go up to the weekly, I think it was something like that. I think that's yeah. So yeah, 118 here. This all the way back here. So we've had a phenomenal run for the euro strength, dollar weakness. You combine those two things, there's only the direction of the trade is only going to go in one way. And thanks initially to the German federal fiscal rally, we've ran all the way to 118 from these lows, 106 at the beginning of the year when people were talking about parity again, down here. 102. at the beginning of the year. In fact, it was, wasn't it, when we talked about parity for dollar against the euro? But here we are, all the way back at 118 today. So that rally continues, although we've cooled today, and I might have moved our stop loss up a bit too aggressively this morning. But it's the beginning of the month, so let's and this trade's been up for a while, so let's see what happens with that. But that's where my stop loss sits on the euro. The Aussie similarly is still. Oh, actually, let's just go through these open trades we've got at the moment. So that was the euro. The other one is the Aussie. Stop loss was dragged up on that here. The stop loss is above our entry here. Still shy of the first target, which sits there at 65. I can't remember what the number is off the top of my head, but anyway, that's the target we set from our entry back here on Friday. Was it 26th? Friday night, I think it was. Yeah. So our stop loss is down here originally. We dragged it up yesterday and today, and our stop loss is now above our entry, so we can't lose on this trade anyway. But we're down on a little bit of a lift for the dollar post what Powell's had to say. So that was the Aussie, the euro. Euro Swiss is the Kiwi is the other one. We got half a position left on the Kiwi. Kiwi is this one, similar pattern. In fact, that has probably been stopped out. There we go. That stop loss has been. Oh no, stop loss is here. The take profit's there. So that's our first take profit, and that's our stop loss that's been dragged up. So we're coming back to the stop loss, but we'll see how that pans out. So we might have topped out at 61 again. It's a multi-year high at .61 for the Kiwi. Kiwi and the Aussie doing as ever sort of in unison, but not, you can't just assume they'll both do the same thing, because very much not. There we go. We got that into that. There we see on the RSI are topping out here on this 1 hour time frame today. Running out of steam. Nice rolling top down in the 1 hour time frame, and hourly traders were short from 3 o'clock, and it's been moving down ever since there quite nicely. Crossed there on the MACD lines down the hourly chart, but we're trading this on the daily and the 4 hour time frame. So that's where my stop loss is at the 21 EMA on the 4 hour time frame. We'll see if this stalls later or how we finish here today. So your Kiwi still long. That's the Aussie, the Kiwi, and the euro. And the other big profitable trade we've had has been the short, the dollar Swiss franc. We've got two half positions open on this now. One from the 23rd still, and one from the 24th. So last Monday and last Tuesday. And we've just continued to move down. In fact, we've been stopped out. There we are. We've turned around. There's our stop loss was pulled right down to 79.37, I think it was earlier today. And while I've been out at the dentist, our short trend has been pulled out. So a lot of pips bagged there. We got in on the Swissy on the 23rd. I've got it written down here on a bit of note, or a bit of post-it note. We got in at 81.24.6 on the 23rd, and we added again at 80.080.513, just to be accurate. It went 5 digits, but anyway, 80.51 and 81.25 basically is where we got in. One on Monday, one last Tuesday, and we looks like we would have been taken out on those just literally in this hour. Just this, there we are. Well, in fact, through the last 15 minutes probably while I've been blaring on. There we are. There's a 15-minute candle, and we just looks like that would have been taken out. Obviously, this is our platform. My actual trading platform is elsewhere, but yeah, I'm pretty sure. Yeah, that spike would have been enough to take us out of those two positions. So that's now closed. The short position we've had on Euro Swiss. Again, I'll update the blog later on that. So that's all the dollar positions. Elsewhere, the other open positions we have at the moment are pound, some of them pound related. So New Zealand CAD's been on for quite a while as well. So let's go and have a look at that one. So cross, so New Zealand CAD, ZDCAD, New Zealand CAD. That's what's going on there. Sorry, it's 15 minutes. Come to the 4 hour time frame. So that's in the money. Still shy of initial target. Our entry was here from the 25th here, so it went down. The stop loss again has been pulled up since that down candle there, pulled that up just today. In fact, I moved that up to 82, whatever that is, 82.55 today. It was all the way down here on the open, but it's still in the money. We'll see. We'll adjust that later on tonight. See how that finishes out. So New Zealand CAD is still open. Euro, Euro, no, Aussie is the other one that's currently still open, and that's really not doing much, is it? Again, we got in here and it's sort of chopped around. It was a bit up earlier, it's down now, so that's not doing anything. I might get a bit bored with that because that's really going sideways. I was trying to get it back to the previous high here from the 24th from last week, but anyway, it's still open, and we're currently out of the money on Euro, Oz, Euro dollars. We've talked about Euro Swiss, we've done Aussie, Kiwi, and two from last night was Euro, Euro Pound. Where's Euro Pound gone? We got a position and a half on this, and this has been doing not a lot today, to be honest. We were down and then we're back up and we're back down virtually to entries. There's a position and a half on Euro Pound from last night here at whatever price it is we got in, 85.75, something like that. Stop loss is down here. I might drag that stop loss up later on as well. It looks a bit extended now. It's completed to move up. So again, one that might be going sideways. And then also from last night, this was out of the money earlier. This is the pound. We got a pound Aussie and pound Kiwi. So look what that's doing. Pound. We didn't quite well with the pound Aussie recently, but we're short this one from when was this from? It wasn't from 25th. It was from last night, wasn't it? It was 30th. That was taken. Yeah, last night we were short here from 2.0864. Been out of the money all day. We're actually briefly in the money here this morning or last night, and we are out of the money still. So again, we're looking to that to move down to 2.08 or 2 is our target, but that one's out of the money. And the other one was pound Kiwi as well, similar sort of pattern probably. Yeah, that's been in and out of the money all day as well, but again short from last night. We'll see where that goes. Still here, the 4-hour chart, the 20 crossing below the 50 there, it's a negative setup. The daily is obviously how we placed the trade last night on that relatively large down candle into the 20-day moving average, but obviously support at 50-day. Well, perhaps I was expecting that to move a bit further, but anyway, short pound Kiwi as well, that's still open and also out of the money at the moment. And the other trade we had last night was an index trade, which was the UK 100. I'll go and look at all the other assets in a minute, my friends. I just wanted to run through the 10 open positions we had at the beginning of the session today, and I'll review what's going on, and I'll let Aurora have some thoughts. So we were long this. Do we go long this or short? I can't remember. Yeah, long. I think I wasn't sure about profit target. Anyway, this was out of the money this morning. We're now back in the money. UK 100. We went long here last night at 8772. I got filled. Our stop loss is all the way down there at 8668, and my target is 8844. I think that was for around. Well, it was. I just like 8844 when I saw that coming up, and it was also around this cluster area here where we'd gone sideways here during that second half of June, and it was a resistance area. So let's see. Might take that profit early on that one. Okay, so they're the 10 open positions we have. Elsewhere, we have got a bit of a weakening of the stock markets. We had a record close for the NASDAQ and the S&P 500 yesterday. Let's actually start with the most important, which is the S&P 500. We closed over 6,200 on the cash market yesterday. Actually, let's put that as a horizontal line because it's a key level. Settings, let's make that, there we are, 6,200. We were up yesterday, 6,204, so a record close again for the world's most important stock market, the S&P 500. We come to the daily time frame. Where do we go from here? Well, around the corner we've got second quarter earnings, which everybody's saying will probably be quite good given that the tariff fight hasn't happened. So it could fly in the face of what everybody's thinking. So just be careful. But technically, this is a horrible V-shape decline. If I just make this bigger, I think I've showed you this before. The fib extension of this decline takes us quite a long way higher for later out in the year. So the 161.8 fib extension of this down move from February to the April Nadia here, the Independence Day, Nadia Independence Day, Liberation Day, wasn't it? Yeah, takes it to 6,700, 6,000 or 6,7 or 6,9. 6,7. So it's a long way still to go, but whether we'll get there or not, it's obviously a big question mark. But the trend remains set. The key thing this week, we've seen the 20-day moving average now sits above the 6,100 level. The bears are getting a bit twitchy. The fact that RSI now is poking into the overbought area here on RSI. We're at 69.92. Remember, 70 technically indicates an overbought market, but markets can remain overbought for a very, very long time. MACD is also showing a positive rally this week. Nice positive green histogram there. Where's my? That's got too big. Where's the? My histogram, my MACD is not displaying properly, but anyway, the trend remains to the upside. We got big support at 6,100, and the 20-day moving average sits there as well. So stock markets remain bid until they're not, basically. So we are running Nasdaq, as I said, the wider Nasdaq hit new all-time highs. The Nasdaq 100 is approaching and being over 22,500 today. 22,700 we were at earlier yesterday. We're down. We're down today, but we're still very much bid. And again, the 20-day moving average here for the Nasdaq 100 is approaching the 22,000 level as well. So all is well with the world in trend following technical analysis for stock markets, and the Dow is performing even better than the other two. The tech stocks have been hit a wee bit today on expectations of perhaps around the interest rate expectations. Tesla's got pulled down on the reignition of the spat between Musk and Trump, but 44,500 has given way for the Dow, and this must be shy of only 500 points now shy of its all-time high at 45,000 is calling for the Dow 30. The industrials have done very, very well this week and at the end of last week, so stocks remain positive. Thank you, Jan. I think Jan, you're here.
Yeah, your voice just like
it's my MACD wasn't working properly on the previous chart. I mean, it's fine here on the Dow. It's remains positive. What else? Crypto was down earlier today. Bitcoin 106. Yeah, so it's gone down again as the dollar's picked up a bit today. But still, as I've been saying for a while, it remains bid to the upside. Really, these channels have broken out. These down legs have broken out again. And it's still sort of consolidating. We're above the key, obviously, huge psychological 100 level here. And we're back into this key pivot area, the 105, 106 channel area again. But we're the next leg up from the 92, 96 channel as well. So this is still relatively bullish. We've rolled over sideways action for the last week or so. And we got big support here. 105, 106 zone, the 50-day, the 21-day moving average are both sort of stuck at that level as well, and so we are very much consolidating and seeing where we go. So big break of this level will take us down to 100,000 levels. Holding again will take us back to test new all-time highs and through that and off and up, 120, 150 to the upside for Billy Bitcoin. So Bitcoin consolidating for a week or so, but still on the bid, and it still refuses to go under its 20-day and 50-day moving average for any length of time. So buying dip has worked here for Bitcoin, but we've got this W shape in a channel between 10,000 channel between like 100 and 111,000 now, the all-time high. So Bitcoin sort of wait and see mode to an extent. Oil, energies, US oil is 66.50 today. We got private inventories later on tonight. There we go. Again, another one that's consolidating down on the key levels. We're rotating through $66 this week, waiting for developments out of Iran, out of anything between Israel and Hamas. That saga, that tragic saga continues. Obviously, the situation in Ukraine and Russia isn't getting any better. So big political mess all over the place. And oil is sort of consolidating at 66, 65 range and a bit non-trending as far as I'm concerned. It's under its 20-day moving average. Obviously, the what Iran does next or what Israel does next to break the ceasefire will freak things out. But it's far from over. I'm sure Aurora would agree with me on that.
Yeah, but about you just explained everything on the market. Mostly you were about your positions that you had. So there wasn't a part that they could add anything because that was your positions that you had already.
Sorry,
you wanted to explain about that. Yeah, about the data, overall data that we had about the PMIs. I told my idea that what happened there, but still the continuing of that. If we look at the U.S. data, U.S. Especially the PMI numbers and labor market data, we could see that the JOLTS is still amazing. I mean, just like JOLTS is again increased, the labor market is moving higher. So maybe these numbers with the manufacturing ongoing, maybe these numbers can can hold back the Fed members to cut the rates even in September. With these numbers that I see here in the table, I mean, when the U.S. economy can, but the question is that will that all the thing is that do we need it to cut the rates right now or not? Because the labor market is moving fine. The economy progress is not bad. Is moving fine. We're moving forward with all going challenges that we have right now. There, but still we have a risk of inflation. So I mean, so things that like that we don't need too much about to think about even about the rate cuts right now. The thing is, other question is that if we'll cut the rates more here, how that can affect the U.S. economy on
that's what we're worried
getting
about.
more. Yeah, how that the thing is that right now we have one of the main reasons that you can get the dollar cash in the U.S. economy is the higher rates that you are paying. So you are selling your bonds. So yeah, you get too much. But yeah, the government, you have to pay more a little bit, but at the same time, you have much more. You have money flow in the U.S.
Yeah,
economy
exactly.
because the people where they are thinking to put their money back, which economy? Again, you are paying more rates, but at the same time, you're paying more rates for the money that you have. If you don't have a money and you have a less, you pay the less. So that I mean, it's worse. Between I choose even like this, like think like this, in a very simple way. Think like that. You have no money, but you are paying 0% of the interest to the. You have no credit going on, and you are paying 0% credit. But you took some credits from the bank. You are making some business, and you pay like some credits. Yeah, I'm agree to pay a little bit more credits, but at the same time, I have some money to do something to make a business. It means that
Exactly.
when your business have some money, when you have some cash to play with that, it means that it's a positive news. I mean, it's a positive side of the having the money rate because rates compared to rates with the 4%, even thought 25 basis point rate cut if we have in the US, it's gonna you're gonna pay the 4% for 10 years bonds in the US. But if you look at in the Japan, you're going to pay around 1.1% maximum. That's the maximum. So if you have the money and you want to buy, I mean, you want to buy the bonds, you're going to buy the Japanese bond or US bonds For sure, the U.S.
exactly.
bond. Which what does it mean? It means that you're going to give the money to the Americans, to Americans' economy. You're going to, I mean, that's what the reality is that's happening in the market. So sometimes it's not so bad to having your rates. But what if again? While your economy,
don't let the president hear you say that. He wants, yeah, absolutely. I mean, and that's what the Fed mantra has been. Wait and see.
yeah,
We're in no rush.
you're
We're in no rush to move. But they're coming under massive political pressure. He's not going to. Powell is too intelligent, too clever to suffer from Trump's not public announcements, but. Yeah, they're going to do what's best in their view for the US economy, and at the moment that's to hold rates as they are. Whether just because he talked about that potentially July being on the table, and all meetings are live, the market doesn't really think that. So dollars hence had a really rough second quarter. Gold is back up. Off the 3,300 level. It's a better day today. It was an okay day yesterday as well. But again, it's a bit like the crypto market. It's a bit of a sideways action here. You can see we're at these the 20-day moving average. Here's the 50-day moving average. They've all sort of got very flat in a line. So the trend is still a bit pressured. I'd like to see a significant break of the 20-day moving average here, which takes us back to test this 3,350 level up here, 3,400. If this is going to start to go to the upside, we'd have to break and break away from this 3,300 level significantly for to move down. But it could move down then quite quickly to this 3,200 level. But at the moment, the weaker dollar is maintaining this gold at these record high levels. So we continue, and obviously the geopolitical uncertainty continues. Lots of chatter obviously this week about trade deals imminent. Besant talked about that early over the weekend, didn't he? We'll see what is actually in the detail, what is actually signed. Japan talking about it. The UK one came into effect today, 1st of July. So yeah, still lots to be discussed. Eyes really on Washington and this his big beautiful bill and more tariff talks. He had a big political wins with regard to USDT. I think that was actually USDC. I sent you, Katharina. I'll speak to you in a minute when I was that to wrap up. I think we should be wrapping up. Certainly, right. Yeah. So gold is up. So guys, watch the Discord group for any trades for tonight. I've still got. Well, I did have 10 open. I think we're down to 8 now. Does that euro closing? And we'll see you all tomorrow. If you're not with us, why not? I always say, don't I? Come and join us. Our valuation, our products are very clear, very straightforward. The most popular is our 2-step challenge, but more and more people are trying to do it in 1 step, the Express challenge. The Express challenge has higher, oops, here we go. Obviously, all the size accounts, that's up to you. But as I say, the 5,000, you start with a $5,000 account from $55. If you're new, if it's new, 25 should be working again today. It gives you a 25% discount. Indeed, it is. So for just over $40, you get $5,000 worth of equity to play with in your account. A little bit more. Just buy yourself a couple of $100, and you can get yourself a $25,000 or a $50,000 account. And 250 gets you a 1-step to $50,000 account. It allows you to take more trades because you've got more equity. Obviously, you don't want to be risking more than a few percent on each trade. The rules are you don't want to be risking more than 3% on each trade. We will close your account if you see you do that consistently. Obviously, you do it once or twice. There's a mistake. Well, for a 1-step challenge, the 1-phase challenge is a 12% profit target with a maximum daily loss of 4%. And a maximum loss over the course of the account of 7%. So it's quite tight. But you can trade the news. You can trade over the weekend. You've got leverage of 1 to 50. If you don't understand what leverage is, you shouldn't be trading. Don't buy the account. Go and understand what leverage is, and it helps you, but it also can fight against you as well. So understand. But 1 to 50, it's not too excessive. It gives you the leverage that when you're going strong, like we are with these deals, these short positions we've had on the dollar, it's really you can really literally leverage your position quite aggressively, as we talked about yesterday in the webinar. Add to your position as the trend is running, and that's when leverage can really play for you when you're very much up and running. Obviously, conversely, when you're down and it's going negative, that's where you get out quickly. That's why you have a stop loss, because leverage works in exactly the opposite direction, and it leverages, it multiplies your losses as well. So make sure you understand what leverage is before you open any type of account. Anyway, that's the one-step account. The most popular actually is our standard accounts, where you do it in 2 steps. It's also the $25,000 one, and again, that's $130 with a 25% discount. And you've got 2 steps here. It's a bit more relaxed. You've got an 8% profit target and then a 5% in the second step. You get your obviously you get your fee refunded once you get to your funded account stage, and 80% of all the profits you make in real dollar terms can be yours at the end of the week. Basically, for every Friday you can withdraw something more than $100, and 7 days after you've started your funded account, you can start taking some real money from these simulated accounts. That's what they are. They're simulated accounts, but they're using real liquidity providers on real markets in real time. So there's nothing hidden here. We're very open. We want you to be successful. Most people, unfortunately, can't follow the rules or stick to the rules or stick to their self-discipline. Watch yesterday's webinar for ideas about that. Watch the one we did a month or so ago as well about trading psychology. That's what you've got to get right to be success in this business, and just follow some rules, or follow me. Follow what I'm doing on the Discord group every night. And so we've had a magnificent June and first half of the year. Let's hope it continues the second half of the year. Anyway, enough of me blathering on. We are back tomorrow for the ADP data. And Miss Lagarde speaking tomorrow as well. Retail sales from Australia earlier in the day. But big day Thursday, we got a non-farm payroll, the weekly claims, and the services PMI data before the long weekend in America. So first week, compressed week of July, and then a long weekend for the US market. So take care. See you all again tomorrow. Arura, thank you as ever. Tatin,
yeah, have a good time.
Who else is here? Jan, thank you for listening. I don't know if you're still here, but take care, everyone. See you tomorrow. All the best, everyone. Bye-bye.